Good afternoon. Welcome to August 11th. And this is Money Chat Now, and I'm your host, Larry Steinhouse. We are brought to you by Investor Schooling. If you'd like to learn about real estate investing, stock options investing, the stock market, really how to make more money, go to investorschooling.com and you could take a complimentary class actually tomorrow night, Thursday night at 7 o'clock. Go to investorschooling.com and you can do that. All right, today let's talk about what's going on today. We'll be discussing another record day for the Dow. We'll be discussing the worker shortage, inflation data, federal rental assistance program failure, the infrastructure stocks to play, taxing the rich. A lot of you guys out there are going to like that one, I guess. Vaccine passports, and of course some of my favorite all-time picks coming up. All right, let's go right into it. Another record day for the Dow. So let's check it out. The Dow rose 220 points today, but it actually peaked at 35,500. I said yesterday that 36,000 is a no-brainer for the Dow, and I still agree with it. 36,000 is going to come, and it's going to go, and it's going to be a memory because it's going to go right past it. I think 40,000 for the Dow by this time next year is an absolute. I actually think it'll happen way before then, possibly 7 to 8 months from now. We'll probably see 40,000 in the Dow. Whether that's the peak, I don't know, but we all know that something's going to happen. What goes up must come down eventually. As my partner Phil Falcone often says, he goes, trees don't grow to the sky. So eventually it's going to come down, but I don't think that day is going to be tomorrow. So keep on plugging along, keep on investing, and keep on making some money. All right, let's go talk about a little bit about this worker shortage. As you know, we had a point where the unemployed were getting an extra $300 to $600 a month, and a week, and they stayed home because of it. Now, we also had, of course, many places were closed. A lot of people got used to not working. And now, all these employers really need employees. So for many low-wage workers, the tighter labor market means that the tables have turned for employers. So basically, if you're an employer, you need to offer more money now in order to hire employees. You know, a long time ago, I've had arguments with many people saying that trickle-down economics doesn't work. And here it is. Here is trickle-down economics. The Dow is kicking butt. Everything is working out. Inflation is going up. Companies are more profitable, and now they have to offer employees more money. Forget this $8, $10, $15 minimum wage. It doesn't matter anymore. Minimum wage is nothing. If you're making minimum wage, honestly, you need to hone your negotiation skills or quit your job and go somewhere else, because that's really what's happening. In recent months, Chipotle Mexican Grill has raised hourly wages and introduced a referral bonus, while McDonald's is chipping in millions of dollars to help its franchisees pay workers more and even piloting an emergency child care program. So think about that. McDonald's Corporation is giving money to their franchises to pay their employees more, and also to open up childcare services for them. That's unbelievable. Target and CVS Health have all announced moves to try to woo new workers and retain current ones. Also, meat packing plants and supermarkets are struggling to find workers, and that's given unions an upper hand in contract negotiations. It goes on and on and on, folks. What's really happening here is now, as an employee, you have negotiation power. Go out there and negotiate. If you think you're making too little money, ask for a raise. Quit, whatever you have to do. But employers are going to pay more money. Let's talk a little bit about what happened with inflation and what the inflation report said. So we talked about this yesterday. We said that inflation was skyrocketing. That might cause the Dow to go down. That might cause some problems. However, it turned out to not be that bad. So as we know, the Dow Jones Industrial gained about 220 points, and it reached a new record. The 30-day stock Dow was lifted by names like Caterpillar and Home Depot. We're going to talk about that in a little while. The S&P traded up, and all of it was because July's Consumer Price Index was released Wednesday, and it showed that prices jumped 5.4% since last year, compared to the expectations of 5.3%. Now, I got to tell you something. This is like, it's kind of like, it's almost comical. And what I mean by that is prices jumped 5.4%. Normally, in a good year, prices jump 1% to 2%. 5.4% is insane. However, Wall Street had already factored it in. They already felt that this was going to happen. Here's something else that's interesting. A 5.4% is a 30-year high. So the consumer price index has not jumped that much in 30 years. That's wild. July's consumer price index was up 0.5%, and that met estimates. Here's what happened, though. The investors were concentrating on the core rate of inflation, which can signal inflation will remain tempered and the economy will remain strong. CPI, including energy and food prices, rose by 0.3% last month, below the 0.4% increase expected. Core prices still jumped 4.3% on a year-to-year basis. So core prices like groceries and other staples didn't jump as much as they thought it would jump. But I don't care what you say. Prices are going up like crazy right now. But what they're looking at is the fact that it's not going up as fast as it was before. That's the difference. Used car prices, which investors have been watching as a sign of out-of-control inflation, rose only 0.2% July after surging more than 10% the prior month. So I tell you, some of my used cars, I bought a car a couple of years ago. I can actually sell it for more money now than I bought it for a couple of years ago, and that's shocking. It's actually surprising. I've never seen that happen before. A lot of cars now are worth more than you paid for them, and that's a great thing, but at the same time, it's very hard to buy cars right now. All right, let's talk a little bit about federal rental assistance. And you know what's going on in federal rental assistance? I'm going to tell you, this is amazing to me. But so basically, if you know, there's the CDC had a moratorium that they extended to October 3rd. And the moratorium basically says, hey, you can't evict people if you're in a high rate of COVID transmission. The the Delta variant has been a problem, and what's happening basically is more COVID cases are being reported, and because more COVID cases are being reported, the CDC is saying, listen, we can't evict people, because if you evict somebody, they might have to go live with somebody, and if they live with somebody, they might have a higher chance of spreading COVID. That blows my mind when I read that, but that's the truth. That's what it is. So basically now the federal rental assistance kicked in, and they're trying to help landlords and tenants. So landlords, of course, are being burned, and tenants, of course, have the fear of being evicted. So across the country, just a small share of federal rental assistance has reached households. Some states are getting the money out faster than others, though. December of last year and then March, Congress allocated a combined total of $46 billion for renters and their landlords. So if you're a renter and a landlord, you're supposed to get a portion of this $46 billion. Check this out, though. Only around $4.2 billion of that money, less than 10%, has reached households, according to a new analysis by the National Low-Income Housing Coalition. Now, this is crazy. This basically means that no one knows how to get it. It means that it's too difficult to get, or it means that people are just ignoring the fact that you can get it. So in some states like Texas has managed to distribute more than half of its first round of federal rental assistance, while South Carolina has given out less than 2%. Across the country, programs are understaffed and overwhelmed by the volume of applications. Insufficient outreach and arduous documentation requirements also have been barriers. A recent study by the Urban Institute found that fewer than half the renters even know about the problem. And that's what's going on. So Andrew Aran, Vice President of Research for the Housing Coalition, said he ran into an application that was 45 pages long. 45 pages long. So basically, you're a tenant who's struggling to make your bills, and you're supposed to fill out an application with no pressure and no worries, a 45-page application in order to get it. And here's the other thing, too. The landlords now have to do that. It's amazing. Anyway, we'll be back in a few minutes to talk about more stuff. See you then.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Felger Cohn and Larry Steinhouse about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend investor schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse, and so far we've discussed things like it's been another record day for the Dow. The Dow had peaked at 35,500. I think 36,000 is right around the corner. I even think 40,000 will happen by the end of the year. We talked about the worker shortage and how employers have to give workers more money now, and I thought that proved trickle-down theory, but that's another story. We also talked about the inflation data and how the inflation rate is unbelievable. 5.4% is insane, and it's been the highest in 30 years. But, hey, it didn't affect the stock market today. And we also talked about the federal rental assistance program and the failures there and the lack of amount of money that's being given out, that should be given out. Now let's talk a little bit about some infrastructure stocks to play and what's happening. So as you guys know, the infrastructure bill was passed yesterday, or being passed yesterday, and some great stuff is going on there. So there are some great stocks that you should play. And first of all, here are some of them: ACM, Jacobs Engineering Group, Caterpillar, CMI, and Deere. I really like Caterpillar play right now. As a matter of fact, if we can get Caterpillar up on the screen, I'm going to talk to you about Caterpillar and why I think this is the next great play. If you want to buy a stock, this is the stock to buy. Caterpillar is absolutely a stock to buy. And I want to say that, first of all, it jumped today. It jumped 7.5 points today, which is fantastic, but that's just the beginning. So I take a look at this chart. If you take a look at the 3-month chart for a second, you'll actually see that at 3 months, it was at its lows for the last couple of, last month or so. And now it just broke through. So the 220, 221, 221 and a half broke through the prior peaks of 218, 219, which makes it an awesome play, which means that this stock is going to rock. I actually believe this stock easily is going to 235. I'm even going to go out on a limb and say it's going to surpass the 240 peak that we saw over the last 6 months because of the infrastructure bill being passed. So this is a great play. It also has a nice dividend. So as a stock, it's paying a 2% dividend, and that's also a great play at this price. So I think this is a great stock for you. I also think it might be a stock options play. It might have been a better stock options play yesterday. Obviously, it went up 7 points, but it might have been a better stock options play yesterday, and we might have missed it as stock options traders. But at the same time, I think this is a good play. I think you can make some money on this. I also think that because it's going up in an upward trend, you might be able to, if it's a slight pullback, maybe 215, you buy it and then you can sell the covered calls on it and do very well in this stock. Again, I think it's a great play. All right, let's go back to Deere would also be a great stock, but let's talk about the next topic, which is taxing the rich. Hey, if you're rich out there, raise your hand, because I want to know what rich means. So rich either means your name is rich, or it means you make a certain amount of money more than someone else. The question is, how much more than someone else is that certain amount of money? I've always wanted to know the answer to this question. State Democrats passed, again, the $3.5 trillion budget blueprint on Wednesday that would allocate extra spending to education, paid leave, childcare, healthcare, and climate initiatives. That is called the infrastructure bill. It would raise funds for the measure partly via higher taxes on the wealthy. So what is wealthy? Once again, I don't know. Those reforms would likely involve tax rates that rich pay on wages and capital gains. All right, here we go. Those reforms would probably involve tax rates that the rich pay on wages and capital gains. Hey, I'm an employer. I employ people. My payroll isn't that big. I mean, it's not that big. It's big to me, but it's not that big to certain companies out there, right? that means that now, because I have employees, I have to pay more. Here's another thing, capital gains. I told you before, I'm a stock trader, I'm a stock options trader. That means I'm going to pay more money in capital gains. If you're watching this show and you trade stocks or stock options, guess what? You're going to be taxed higher too. I guess that means I'm rich, and I guess that means you're rich. That's where we have to be careful. That's where I have a problem when they say taxing the rich. The outline offers scant detail on specific tax policy relative to the wealthy, saying that it only seeks tax fairness for high-income individuals. So if you make $50,000 and I make $100,000, and my tax rate is the same as your tax rate, actually it's not, because I actually go into a higher tax rate than you do if I make 100 and you make 50. Is that fair enough? No, I guess not. Apparently it's not fair enough for politicians. That's, once again, not the way it's supposed to be. The middle class is always getting hurt. Listen, I'm middle class. I don't know if I'm upper middle class. I don't even know what the hell that means. But middle class is the one being hurt. The billionaires don't really care. I mean, some of the things that we teach at Investor Schooling, we teach people how to pay less in taxes, but you're still going to have to pay a share, fair share, not fair share, I don't care, a share of taxes, always. And the question is, should the people who are working the hardest pay those taxes? Now, you got to remember that on the opposite ends of the spectrum, we have the poor and we have the billionaires. Both of those people don't care about raising taxes. That's the funny part. Poor people don't pay any taxes, and billionaires, whatever, they just write the check. So it doesn't really matter. So guess what? The only people who are going to be affected by this are probably the people making anywhere from $75,000 to, I don't know, maybe $500,000 a year. Yeah, I realize $500,000 a year is a lot of money, but $75,000, $100,000, $130,000 for a family of four, it's not that much money, and that is the middle class. Those are the people who are going to be hurt the most by this. Don't be fooled. Just know that once again, your taxes are going to be raised, and you need to learn how to pay less taxes. All right, here's another favorite topic, vaccine passports. A survey from a travel website upgraded points of 1,000 people. They actually interviewed people from June 2nd and found that 81.8% of U.S. respondents supported the idea of a vaccine passport, usually defined as a paper or digital document proving inoculation against COVID-19, and 54.9% said airlines, hotels, and other travel companies should require proof of vaccine from customers. Guess what, folks? It's happening. You're going to have to go. Somebody's going to walk up to you and go, papers, and you're going to have to show your papers. That's what's going on in this world right now. The travel industry has been generally supportive of digital health or vaccine passports because they see it as something that will streamline the overall travel experience, especially for air travel. So basically what's happening now is you have two choices. You can get stuck in the arm, or you can get stuck in the nose. Because this is what you're going to have to do. If you're not stuck in the arm and you can't prove that you're stuck in the arm, then you're going to have to be stuck in the nose and prove that you don't have COVID. And the only way to do that is to get a Q-tip up the nose. So you choose Q-tip up the nose or stick in the arm. That's what's happening right now. This violates everything I've ever known about freedom and freedom of choice. But those are the choices. Stick in the arm or stick in the nose. Take your pick. They both stink. All right. 61% of those surveyed told Upgraded Points that they think a vaccine passport actually do infringe on the rights of the unvaccinated. However, 50.9% said they also would just likely go and get the jab, because if they get the jab, they don't have to get the stick in the nose. And that's really what's going on right now. All right, we're going to be right back. I'm going to tell you a little bit about what this commercial is about. We're going to be giving away Phil's car, my partner Phil's car. And if you want to get a BMW Z4 for free, watch this video.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car? Huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse, and here we are. We're going to start talking about some of my favorite picks, some of my favorite stocks coming up. Here we go. Let's say I'm going to tell you again and again and again and again and again and again, play travel stocks. Play travel stocks. My favorites are still CCL, still RCL, still Norwegian Cruise Lines, NCLH, and AAL. But any cruise or transportation stock is a recovery play. If you remember, I've been saying this over and over and over again, the reality of these stocks are that they have not recovered yet from the COVID government overreach. Now, the cool part about this is they have so far to go. Remember that every single stock, almost every single stock, I should say, has recovered, and not only recovered, but blown past their previous highs before COVID. That means that these stocks not only have growth to grow back to where they were, but they're probably going to exceed where they were. That's what makes them great stocks. I watched AAL today. It was up another quarter or something. I don't remember. And CCL, same thing. I think it was up another quarter. RCO was up $1.50 at one point. These are all great stocks. And as I said before, the hotel stocks have already recovered. All right, I want to talk a little bit about Caterpillar. I think we had that up already. Caterpillar is a great play. But here's another one, Nikola, NKLA, Nikola. Now, Nikola went below 10 today. And I set alerts for certain stocks. And I set an alert for Nikola, and it went below 10 today. Now, if you look at the 3-month chart for Nikola, you will quickly see that in the 3-month chart of Nikola, you'll quickly see that it happened one other time that it went below 10. And then it quickly recovered. And when it quickly recovered, it shot up to 14, 15, 16. I think it was as high as 18 at one point. I would never play it that far. But why not buy it now at 10 and let it ride up to 13? If it rides up to 13, you take the 30% money and just go for it. Matter of fact, I actually bought some Nikola stock today. I didn't buy the stock option. I bought the stock because I'm looking to sell the covered calls on it later. Also, once again, stay away from Moderna. Stay away from Moderna as long as it's over 300. It's funny, Moderna, everything that went up yesterday, it came down today. Okay, let's go back over to, real quick, I'm just going to mention them, no time, but real quick, I like Apple, I like Alibaba, I like Robinhood, I like Coin. I want to thank you again for watching Money Chat Now. And of course, from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show are solely mine, and no one has asked me to discuss them. Thank you for watching Money Chat Now. We look forward to your continued support. Please, please, please like, share, and subscribe to our channel so we can get you and other people to watch this channel and make more money. Take care.